Alright guys, welcome back for another video. In today's video, I'm going to be covering the orange pilling of Jordan Peterson. Make sure to watch the very end of the video. That's where you'll see the eureka moment where he really swallows the orange pill, and you can see that he's opened Pandora's box. And for anybody who's also done that, that there's really no going back from that point. So make sure to catch the end of the video. But again, it's interesting seeing somebody so high profile go through a similar process that I went through, a little while ago. And some of the questions that he raises in the videos is very, I resonate with on a deep level, and I can see myself going through the same processes and asking some of those similar questions. Now, in the first video I'm going to cover, it's a group podcast with a couple other guys who've had Bitcoin podcasts for a while. And in that video, Peterson asked some of the basic questions that you would ask if you were kind of, new to Bitcoin and not really sure about what the protocol is, and maybe some of the concerns about the network is more prominent in your mind.
That in some manner, Bitcoin is provides an incorruptible language of value, preferable to gold, say. So maybe you have to buy the argument first that gold is preferable to a currency that isn't dependent upon something like gold. And that's also a separate argument. But you're making the case then that Bitcoin is superior even to gold. And so we'll go into that. What's your background, John?
So I think, where Jordan Peterson is making the natural step here is to link the connection of gold to Bitcoin, right? And I think it's a logical step. I'll make the case later on in the video that it should also be linked to energy, or thought of as monetized energy. But I think the first initial step is to, perceive it as gold, and to look at it through the lens of Bitcoin fulfilling some of the roles that gold has fulfilled historically. And you can look at historical price action for gold, back in the 70s and 80s, and extrapolate that onto Bitcoin, assuming that Bitcoin's playing a similar role to that.
Those things that they value, and that the manner in which they act is actually an indication of what they value. And so money becomes an index of people's value preferences, and value preferences associated with their preferences for action. I mean, that shapes even such things as perception, right? Because perception, we think about that as something that's automatic, essentially, because the world just appears to us in some sense. But you move your eyes constantly and you orient your head so that you can hear one thing rather than another, and you pay preferential attention to one thing rather than another. And you do all of that as a consequence of comparative value. And I was reading a book on Austrian economics last night, and they were talking about trying to define economics, and it struck me that the most suitable definition was something like the science of comparative value. It looks like that's what economists concentrate on. And then money becomes an index of comparative value. And then that leads, well, I'm going to talk to Robert next. I'll get him to introduce himself. But I know Robert has written a fair bit philosophically on the implications of money in general as a signal of value, and of Bitcoin in particular. So Robert?
So he's kind of diving into the idea of Bitcoin as comparable value, and the reason why Bitcoin is a symbol of comparative value is because it's entirely monetary premium, meaning that it has no utility. Like even gold, which is primarily a monetary premium, it still has some element of its market cap that is utility used in jewelry and electronics. And so it has a very finite purpose, and it's a very strict commodity in that sense. But Bitcoin is unique, and it's 100% monetary premium. So its value, it's very difficult, or it can be very counterintuitive for people to value it, right? Because essentially, since it's 100% monetary premium, it's going to be valued alongside of what the market values, and what the aggregate of the market's valuation system assigns it to be.
Genesis of Bitcoin, up to the present moment, I can verify everything myself.
Right, so it's completely transparent, it's completely distributed, there's no centralized authority, it can't be cracked, it can't be stolen, It doesn't inflate. It can't be inflated. It isn't subject to, at least so far, to any form of overt administrative control. So let me ask all of you guys a question. Maybe John and Richard can chime in this because they haven't spoken too much yet. So one of the questions might arise, especially in relationship to Robert's comments, is that we switched to a fiat currency back in 1971, and obviously you guys are no fans of fiat currencies, but we do have money and it does work. It still stores value. We can still spend it. And so I would say, please tell me why I'm wrong, or if I'm wrong, or if you agree. The American dollar has been the currency of record essentially since 1971, perhaps since before that, despite the fact that we've switched to a fiat exchange system. And my sense is the reason that people use the American dollar is because the judgment of the world is that, by and large, the social structure of the United States, social and economic structure of the United States, is such that it's more reliable than any alternative. And so people trust individual Americans in some sense. They trust the trusted interrelationship they have with each other. They trust the emergent social institutions. And as a consequence of that, they're willing to put the same kind of faith into the dollar that you guys put into Bitcoin. And so that's...
So what he's tapping into now is the idea of network effects. And network effects essentially explain the reason why the dollar is so pervasively adopted and very hard to disrupt, even though it has such a fundamental flaw of being constantly devalued. And that is really a testimony to the power of network effects. And once something is established as a network effect, it's very difficult to disrupt, and whatever competitor is going to disrupt it needs to have a very significant premium to be able to do that. Some greater marginal utility over any other competitor, which, in this case Bitcoin does have, and it's the reason why it's doing something that nobody expected it to do, anything to be possible doing.
Whenever I generate wealth, I generate it as a consequence of my interdependence with other people. I wouldn't be able to do it on my own. I'm dependent on the infrastructure. I'm dependent on the government, or at least I have the advantages that those things provide me. And so could I not make a case that if I've managed to accrue a substantial sum of excess capital savings, that it's reasonable for the rest of society to expect me to allow some of that to inflate away as a tax on my hoarding, as a consequence of the fact that part of my wealth is generated as part of a shared endeavor? Because, you could posit a wealth tax, right, that might address inequality, so that there's a 2% wealth tax or something like that on fortunes over $500 million. And so they decay with time to restore that hoarded wealth back to the general community. What do you think of an argument like that?
So here he's kind of posing the question of, is inflation a tax on the wealthy? And here he's a little bit misguided in that, because it's actually the opposite. It's actually a tax on essentially the poor, people dependent on the cash. They don't have assets, they don't hold assets. And it's actually a tax on people who are savers, who are able to delay gratification for the future. And it's an incentive structure to discourage that in a society, which is something we'll touch on that in a further video.
The cognitive power of the free market.
Right. I want to emphasize that because it's such an important point, and it could easily be skipped over, because there are people who admire the ideas of central planning, and you think, well, maybe there's 40 people doing your central planning, and so maybe they're the smartest people in the world and they're doing your central planning, but they have to calculate on the fly a virtually infinite amount of information if they don't have free market prices at their disposal. They have to calculate what metal is worth, what nails are worth, what labor is worth, what rubber is worth, what cleanup is worth, what nursing is worth, et cetera, and they have to do all those comparisons, and they have to do those computations, and there's actually no way even technically of doing that, and the alternative is to distribute that calculation across a virtually infinite number of actors, or actors in the billions at least, and let every single person act as a computational device and sum all that. And that's what the free market does. It's not even in principle replaceable by a logical cognitive mechanism. I can't see how it is.
That's exactly right.
So essentially what he's touching on there is the fatal flaw of central planning. And it's rooted in, pride, essentially. And you get people who maybe they're intelligent, maybe they're not, who knows. But just assuming they are intelligent, they have the pride to assume that they can do a task that nobody can do. Even no group of geniuses together can do. The markets are too complex and decentralized systems for any individual or small group of people to understand.
An objection to that just briefly. So I'm going to accept the pyramid scheme hypothesis, but I'm going to say that it's a pyramid scheme that sacrifices the future to the present. But that doesn't matter, because the future is going to be so much more productive than the present that we can afford that leverage.
So essentially what he's touching on here is the idea that he's kind of, it's dawning on him that the fiat system is borrowing from the future to subsidize the present, right? To subsidize the risk in the present. And it's really, you can really see that dynamic in the relationship between the boomer generation and the millennial generation, right? The boomer generation has, not that everyone is complicit, but in general, they have extracted, stolen the future of their children to subsidize their own present, their own risk, which really is shameful behavior.
Why do we allow this? We're not going to degenerate into conspiratorial thinking, and I'm always wary of any conversation that involves they, an external actor. Like we've allowed this as a global community, and if what we've done is flawed in the manner that your analysis indicates, why have we allowed it to happen? I could say who benefits, and we could go there to begin with. But again, as I said, I'm very leery of conspiratorial thinking. I tend to think of large-scale social problems as everybody's problem, But so what do you think about that? Why have we allowed this to happen? And let's say who benefits and why.
Well,
and who.
So here he's kind of, hesitant to fall into the temptation of conspiratorial thinking. And really, it doesn't, whether or not you believe that the fiat system was constructed with a conspiracy in mind or not, that doesn't change the inherent incentive structure around the system, right? So whatever the intention was when it was orchestrated no longer really matters. Right now, the incentive structure is there in a way that dictates behavior, and people sort of follow the incentive structure.
Let me ask you guys a question about what happened in 2008. And I may be completely wrong about this, but my understanding was that the 2008 crisis was fundamentally produced by a technological revolution. And the technological revolution was something like the realization that you could take investments of a certain risk level, mortgages, let's say, substandard mortgages, and by bundling them together in huge tranches, in huge groups, you could quantify the risk. And as a consequence of quantifying the risk, you could make the group of investments more valuable than they would be as the sum of the individual investments, which I thought was a brilliant innovation. And so now these companies, banks, traded these huge tranches of subprime mortgages because they could quantify the risk. And that means that could be accounted for financially. And so the risk was ameliorated. And the flaw was, well, no one realized that doing so en masse would increase the probability that housing prices would become correlated across time, across huge geographical regions, for example, across the entire United States. And so the housing market could collapse all at once. But you could make the case that was actually a flaw in the free market computing prowess.
So what he's talking about here is how, in an effort to reduce risk by the central banks and the central authorities, they say that they're reducing risk by engaging in quantitative easing, bailing out these large corporations. bundling these debt together. But what they're actually doing is they're pushing out the risk onto the tail end of the risk spectrum, meaning that they're actually increasing systemic risk. And that's what you saw in 2008 when that came to a head, right? They had pushed risk out onto the tail, and then the tail came into fruition, and you saw a systemic issue, right? That was only possible to be bailed out with massive money printing, which is generally the response for every crisis.
You guys are right. Tell me if I'm leaping somewhere I shouldn't be here, but what should happen is that whatever energy is expended in the production of Bitcoin and the maintenance of the system should be more than recouped by the increased efficiency of every system that used Bitcoin as a transactional device. And so the net energy, there'll be a net energy gain, not a net energy loss, if you calculated it across the entire system. And so it's a mistake just to look at the cost of generating Bitcoin in the absence of considering the efficiencies that Bitcoin would produce.
And the same is true for...
Yeah, so right here he's kind of trying to touch on the narrative that, Bitcoin is inefficient or consumes too much energy. And, he does point out the fact that Bitcoin improves energy efficiency, and that's pretty obvious when you look at where Bitcoin mining is popping up, right? It tends to pop up in areas with central planning in communist countries, where they have extreme inefficiency. Like in China, they'll build a dam out in the middle of nowhere and create a lot of trapped energy, and then you'll see Bitcoin rigs pop up around there. But how Bitcoin, affects the energy market in the aggregate and the overall efficiency is very difficult to analyze from this part, and it's difficult to analyze it because it's not a 1-to-1 ratio of energy. So as you have the difficulty adjustment in Bitcoin, which affects the hash power, and that directly affects the amount of energy that's required to mine the network. So it's very difficult to create a constant metric to identify that. But I think in general, the idea that Bitcoin will move into areas of inefficiency in the energy market is a good assumption. Again, it's hard to know exactly how that will play out until it does.
What they choose to do with that sovereignty is their choice. Yes,
right,
as a
but
society,
you guys are also, you're also
making
making a case, all of you, that the very act of Bitcoin sanctifying the sovereignty of the individual is actually tilting individuals towards doing something good rather than something bad. That it's not just neutral, as Gigi was laying it out, that there's an intrinsic ethic to Bitcoin that is more likely to tilt it in a positive direction, which would be a more powerful rejoinder to the Bitcoin equals criminality criticism.
What he's kind of, touching on here is the idea that the incentive structures around Bitcoin, they encourage people to participate, to engage with other people and society in a way that's constructive, in a way that is not exploitive, because it's very difficult to exploit people through the Bitcoin protocol. And, the corollary of that is that he's also touching on the fact that the fiat system does the opposite, right? Because of the weaknesses in the system, it encourages, grifting and exploitation and the type of scammy type behavior that we see with so much prevalence in, this day and age.
Because there's something in there too that's quite difficult to grasp, quite difficult to believe, apart from the fact that the technical aspects are rather impenetrable for an outsider. The way Bitcoin came about seems like a story that's virtually impossible to believe. You couldn't make it up, right? So this unknown engineer, Satoshi, anonymous, came up with this idea that no one else had ever had, implemented it online, anonymized it, and then vanished essentially without a trace. I mean, how much do people know about him? Are we sure he's who invented it? And what the hell was he up to? And why did this happen? And why should an outsider believe any of this? Because it does seem like the plot of a bad science fiction novel.
Yeah, really everyone who takes the orange pill kind of is, confronted with this mystery of who is Satoshi Nakamoto. And ultimately, the answer to that question is it doesn't matter. I mean, the Satoshi was clearly someone extremely intelligent, someone probably who could be described as a genius. But ultimately, at this point in the Bitcoin protocol, he has no more control over the protocol than anybody else running a node has. So ultimately, the identity of Satoshi doesn't really matter.
Because it seems precisely the opposite. I mean, because it seems to me that that's more grounded in a kind of humility. There's no way of determining once and for all what the best thing is for the most people. So what we should try to do is establish institutions that distribute decision making in as uncontrolled manner as possible, I suppose. So that's like in some sense, is that a radically free market approach that is applied to all sorts of institutions? And the fundamental issue there is the decentralization of decision-making power.
Absolutely. And this is
So what Peterson's kind of talking about here is, the benefits of decentralized participation in the markets as compared to centralized action. And, you can see that in the way that
Basically,
that capital is allocated, right? If you have a centralized authority controlling capital allocation, then you get a lot of capital misallocation, right? The state or the government allocates capital to institutions that aren't really producing anything that the market values or aren't really driving any innovation. And the flip side of that, the decentralized action, is that when decentralized actors are acting as entrepreneurs in the market, risking their own capital or capital of investors who've willingly chosen to invest in them, then that decentralized those decentralized actors participating in the market are more likely to produce something of value or produce some type of innovation that the market actually values.
we just accepted, in some sense, on faith, the idea that money is the government's, fundamentally. The money, I know we all have our money and we own it, but it's a state construct. That's why each country has its own currency. And so one of the functions of the government is to deal with money. And the idea that you could abstract that away from the government, any conceivable government, conceivably forever, or at least forever as far as we're concerned, it's hard to wrap my head around how radical an idea that is. I don't know what that would mean if it was actually true.
So this is kind of a sticking point for a lot of people when they, start talking about Bitcoin. Is I think a lot of people have similar assumptions to what he just said. That money is a creation of the state. It needs to be governed by the state. That they need to be the third party intermediary that guarantees trust. And I think very few people can cross that divide, right? But if you can entertain that notion that there is a possibility that money can not be controlled by the state, that there could be some other protocol that everybody engages in and is liquid enough for massive market players to get involved in, and then it opens Pandora's box to what that means for the rest of the world, right? What does the world look like if money is not governed by the state, right? It certainly looks like a different world than the one we live in right now.
Basically just accepted, in some sense, on faith, the idea that money is the government's, fundamentally. The money, I know we all have our money and we own it, but it's a state construct. That's why each country has its own currency. And so one of the functions of the government is to deal with money. And the idea that you could abstract that away from the government, any conceivable government, conceivably forever, or at least forever as far as we're concerned, it's hard to wrap my head around how radical an idea that is. I don't know what that would mean if it was actually true. And so And the idea that, I mean, the arguments that you've presented that suggest that the notion that that the government has valid control over money, and maybe that should be subject in some sense to the democratic process rather than the market process. It's going to take me a long time to think that through, because that really is it's unbelievably radical proposition.
Yes, that's kind of one.
Like in Weimar Germany, you think about the people who were punished by that hyperinflation. Those were people who were productive and who had foresight because they put away something for the future. The ants were punished, not the grasshoppers. And that's a terrible thing to do to a society, to take the most creative people who also have the ability to delay gratification, and then to just cut them off at the knees for daring to do both of those things. You couldn't do a worse thing to a society in some sense than that. To punish people for creativity, productivity, and the capacity to save instead of the pursuit of impulsive pleasure. So it is really a catastrophe. So,
It absolutely is.
Yeah, so this kind of ties into what we were talking about earlier about, the fiat system creating an incentive structure that is damaging to society, right? It's rewarding the wrong types of people. Whereas like Bitcoin, right, increases people's time horizon and actually rewards people who are able to save and plan for the future in a way that's just totally opposite of what the current system does.
If anybody wants to come and get this reward, they first need to spend.
why wouldn't they just buy Bitcoin? It seems to be a lot simpler than mining it. Then if it costs $350,000 to make.
So in this clip, they're talking about the mining network and the economy around mining and the price of energy, essentially.
Make $350,000. Why bother with the mining? You said it rewards more efficient people.
Exactly. The short answer is, if you have a way of securing electricity at less than 5 cents per kilowatt hour, then you should get into Bitcoin mining business, which is lower than most rates everywhere in the world. So if you have a source of energy that is isolated from the grid, or if you have a cheap way of securing energy, then Bitcoin is a great way. Mining Bitcoin is great, but for the most.
So does that mean that Bitcoin is a very good way of moving resources from places that can produce electricity very cheaply to other places where electricity is more expensive? Does that actually make the cheap electricity, it makes the cheap electricity much more valuable?
Absolutely. This is
weird. That's a weird thing.
It's very weird. I think it's going to have a very profound impact on the global energy market, because for the first time in history, we have a way to sell energy that is location independent. So a lot of places in the world have a lot of energy, but it's very expensive to get that to the population center. So the north of Canada has
So you don't need.
So you can kind of see the orange pill sinking in right here, but I think it's kind of, people naturally go down the rabbit hole and they realize that Bitcoin is going to disrupt the energy market in certain ways that are predictable, that are, easy to interpret. But then, of course, there are other ways that are very difficult to interpret from this standpoint, right? In some sense, we'll have to learn as we go.
You need wires.
Exactly.
Jesus, that's weird. That's a really strange thing.
Yeah, to get electricity from the north of Ontario to Toronto needs a lot of wires, or you need to, if it was gas, you need to put it on tankers or on trains or in pipelines. All of that stuff is pretty expensive. But with Bitcoin, you just need an internet connection. You take the Bitcoin miners to where that energy is, and then you can monetize that energy and turn it into Bitcoin. It's magic.
So what's the net effect of that on the price of electricity worldwide? Is that deflationary with regards to electricity cost?
I think so. I think this is a point that I make in the fiat stand, which is that we've had fiat subsidize all these dysfunctional forms of energy over the last 50 years that have led to the grid becoming unreliable, and we have Bitcoin, like the vigilante savior that it is, coming in and providing a global subsidy for anybody who can make electricity at a cheap rate to monetize that. And I think,
well, not only at a global subsidy, but it's so interesting, because not only you could go to where the energy is cheap with virtual certainty that you're going to make more and more money as the value of the Bitcoin increases by investing there, assuming you assume that the value of Bitcoin is going to continually increase, which is a logical presupposition if it's as stable as is claimed, and it's finite in the way that you're describing, and increasingly widely accepted by vast numbers of people. So it's also an investment that's likely to increase in value over time rather than decrease. So it takes some of the uncertainty out of investing in cheap electricity generating processes that are geographically isolated. I just can't believe that's true. It's amazing that I think I must be misunderstanding, because it seems like you can move the value of the electricity magically without any of the problems of transportation.
Yes, exactly.
So you can almost see the exact moment where he took the orange pill, and you can see the kind of that realization sinking in. And it's a major realization, because it changes. It's one of those types of innovations that changes the entire world. And honestly, people may have some grasp of what the changes will be, but it's so revolutionary that even people who have been in Bitcoin from day one, they're still learning as they go, right? They're still learning new things, and the rabbit hole truly doesn't end.
Wow, that's really something. Okay.
And in terms of, think about it in terms of independence, I think the implications are pretty good, because if you have an energy source, it becomes far more sustainable to be able to exploit that energy source if you have a steady way of monetizing it. So I think it can help people get off the grid. It can help people become more independent. You have your own energy sources, and you have your own monetary system that you use to trade with the rest of the world. You don't need much of the control of the grid on you, which is getting more and more suffocating every day.
Yes, and as this idea that we're despoiling the planet, and our technical activities, our industrial activities, our high standard of living, all that's immoral because we're doing immeasurable long-term harm to this pristine biosphere. Like that, you can just feel the moral pressure growing there, just intensely. And
Yeah, and I think it's
So you can almost, it's just interesting to see the process that, the orange pill process, and seeing somebody this high profile go through it. I'm sure we'll see other high profile people follow the same path, and that'll be really interesting, especially when it starts hitting politicians, heads of state. What does that look like for the world? But, I guess if there's one thing that this whole experience makes me think, is that we really are in an interesting time to be alive. So, a lot of people, when they're going through disruptive periods in the world, they can take a real doom and gloom mentality about it, and think that change is, they have expectations of change as being extremely disruptive and damaging, but it doesn't have to be that way. I mean, it can be extremely